The stock market's not done crashing. The Fed needs the market to crash. Donald Trump needs the market to crash. And if you've been waiting to buy a house, you need the market to crash. Let's focus mostly on the Fed in this video because that's actually who is pulling the strings here, okay? The Fed is pretending like they're being super strong and that they're just trying to fight inflation. Here's the truth of things. If you are 30 or 40 years old, here's the average interest payment that the Fed has made on the debt that you hear about all the time. Well, right now, here is the interest payments they're making on debt right now. And here's where it's going if they do not refinance the debt, which is currently sitting at 3.24% on average. If the Fed doesn't refinance about $9 trillion by June at a lower interest rate, they are literally not going to be able to afford the payments. So the Fed has to allow the economy to crash so that they can lower interest rates. Now, Trump wants people to be able to afford homes. And right now we are at the lowest affordability for homes ever in history. So we need lower interest rates in order for you to be able to afford a home. And I do think home prices are going to crash pretty hard with this entire process. But for the interest rates to drop, the Fed has to agree to do it too. So you have Trump wanting the interest rates to drop. You had the Fed wanting interest rates to drop, but they need the economy to completely crash for them to do it. And they need it all done by June. So the market...
America is collapsing before our very eyes.
Hold on. America is collapsing. Strip malls are empty because e-commerce killed retail years ago. Restaurants are closing because consumer spending shifted after prices went up. Luxury apartments sit vacant because developers overbuilt without checking demand. This isn't collapse. This is bad business decisions catching up with reality. Markets change. Consumer behavior evolves. That's not apocalypse. That's Tuesday. If you're worried about your local economy, watch where money's actually flowing. People still spend, just differently. Online instead of in-store. Meal prep instead of dining out. Don't mistake adaptation for destruction.
Restaurants are closing their doors for good in my city at a record pace. They're blaming it on a slow season, but I think it's something else. You can't tell me the amount of abandoned strip malls that I drive by on a daily basis is normal. I know you've seen it too. All these places just get replaced with the capybara cafe de jour or a flower store to placate the masses, if you know what I mean. There used to be 24-hour diners, family-owned restaurants, even bookstores, I don't know, third spaces. Now, nothing. Luxury apartments that sit vacant forever. Grocery stores that have been closed for 10 years. So much wasted space in empty parking lots until some TikTok trend comes, opens for 6 months, and then that closes too. I know I'm not alone in this, but yet every single time I bring it up, I get all the bots in my comments telling me the economy's never been better. But I ask for who? Like 100 people at the top? So the billionaires are doing great. I don't care. People like you and me, we're struggling out here. All my friends live in vans. And if we are lucky enough to have apartments or houses, we're living behind locked doors and closed blinds because there's no community here anymore. Restaurants are just the beginning. They're the canary in the coal mine. Once they're gone, so are all of our meeting places.
60% of the American public is about to lose everything they have. People living paycheck to paycheck are about to go broke. The GDP numbers came in yesterday, and of course the economy receded, which I predicted 2 months ago, and people laughed. Mark my words, the second quarter is going to be far worse. Tariffs on Chinese products at 145% are about to kick in, which means everything you buy from China on Amazon or elsewhere is about to go through the roof. Grocery store shelves are starting to empty at Walmarts across the country, and of course grocery prices continue to soar. People who've been financing groceries on credit are starting to default on those payments. We are about to see an economic catastrophe. If you're in this 60% that has little or no money, please stop spending money. Protect your family. Trump does not care about you. Even if you voted for him, he's a billionaire. He won't suffer, but you and your family will. Please protect yourself.
Stop spending money entirely to protect your family. No, terrible advice. If everyone stops spending at once, you actually create the crisis you're trying to avoid. It's called a liquidity crunch. Money needs to circulate. What you should actually do, prioritize essentials. Food, housing, utilities first. Cut subscriptions you don't use. Stop financing things you can't afford. Build a small emergency fund. Even $500 helps. But don't freeze and panic. Grocery prices are up. Yeah, tariffs are real, but shelves aren't going empty. Supply chains adjust. They always do. Stay employed. Live within your means. And for God's sake, don't finance groceries on credit cards. If you're doing that, you've already got bigger problems than the economy.
60% of the American public.
I'll be honest, when I first heard that it could happen, I'm like, there's no way they're going to let that happen. They might play games with other things. They're not going to play games with people's food going into the cold, going into the holiday season coming up. They're not going to use that. But they did. We should be slammed right now. But I mean, you can see we're not. I mean, so sales not being there, you know, affects everybody's wages, affects everybody's hours. And let's face the facts too. The people that should be here buying the product, they're not buying the product, so they're going without the product. They're going without meals. From my perspective, and maybe I'm wrong, both parties and the president of the United States office and the governor's office, every one of those people had some kind of a button they could have pushed to release some kind of emergency funds, you know, and they didn't. They didn't.
Guys, the stock market is crashing and we have never seen such thing ever happen. I mean, this is just crazy. Nvidia is down 5%, AMD is down 5%, Nasdaq is down 2.5%. Gold went from plus 1% to minus 1%. Silver is down 1.5%, 2%. It's down 1.5%. This is, guys, this is crazy. The market is tanking. Why is this happening? I don't know. This is just crazy. We have never seen such market like for ages. This is just crazy. Everything, we got the government shutdown, reopened, and guys, I was expecting a market pump or a small correction, but the stock market is just crashing. Guys, this is crazy. I don't even know what to do. What are you doing? Because, well, we should buy, but who knows? It's gonna go down. I don't know. Will it go up again? I don't know. But this is crazy because everything is going down. Commodities, stocks, ETFs, everything is going down, and this is just crazy. We have never seen such thing happen for many years. This is crazy. What do you think?
This guy's melting down because the market dropped 2%, Nvidia down 5%, gold down 1%. Bro, that's not a crash. That's called volatility. That's a normal Tuesday. If you can't handle a 5% dip without losing your mind, you shouldn't be day trading. Markets go up and down. That's literally what they do. Corrections are healthy. They reset overvalued positions. If you're in index funds and diversified portfolios, you're fine. Close the app. Walk away. The worst thing you can do during volatility is make emotional decisions based on fear. Don't let red numbers turn you stupid.
Hello and welcome to my channel. My name is Marcus Edward. In this video, I am here to educate you about curses. Now, I have been receiving volumes of requests and people are telling me that their business is cursed. They are not getting customers. Let me tell you something. You could watch all of your YouTube videos and you could try everything in restarting that business that was cursed. Now, when your friends or people conspire against you, or people who are jealous against you, they don't just do things from the internet or do it to themselves. They seek professional help. Let me tell you something. I have a very powerful book in my house, and I have many of them. And when your friend is extremely jealous of you, what they do, they go to a practitioner or a voodoo man. And this person will get something from your shop or something from your whatever business you have. They will get that particular thing, something with your business name or something that you use. It could be a t-shirt, it could be some object. They will go to the voodoo man. And most curses that are placed on business are very profound. So the more you try to remove it with very minute rituals, you exponentially open a portal and you make it worse. You know, I've always used different analogy to people, and I said that if you have an eyesight problem, you can't make your wife or your husband repair it. You have to go to the specialist. If you got a tumor, you can't take a knife and cut it. You need to go to a surgeon or a specialist to operate on you. When people conspire against you, especially when you have a business, one of the craziest way to stagnate your business is to take your possession. And this voodoo man is going to go to a tree in the forest and he's going to nail your name along with the possession, whatever object in your business, is going to nail that in a tree, very far from your business, far away from the city. And you will never see the day of light if you don't go to a specialist to get a solution to resuscitating your business. Although they use different ones, but the most highest level one is putting you in a tree. For example, if you're a very successful lawyer or an accountant and somebody is very jealous of you, they do not want you to be at the same status. They could go to a voodoo man, an evil or an obeah man, and they will have your possession, and they will nail you to a tree, and you will never see the day of life if they were to perform such curse upon you. So sometimes your curse is very profound. Even your pastor cannot help you. So you need to go to a practitioner. So I'm sending this message, and I hope it reaches the hearts of people who have failed in business. Don't just call people and just don't try anything. You're opening portals that makes it worse for you.
So your business is failing because someone nailed a voodoo curse to a tree in the forest? No. Just no. If your business is struggling, here's what actually happened. Your market changed, your customers left, your pricing's wrong, or your product doesn't solve problems anymore. This whole "you're cursed, pay me to fix it" pitch, that's a scam. Classic predatory sales tactic targeting desperate business owners. Do an honest audit instead. Are people buying? Why not? What's your competition doing better? What changed in your industry? Talk to actual customers. They'll tell you exactly why they're not buying. Blaming invisible forces for failure is the opposite of accountability. Fix your fundamentals or stay broke. Your choice.
Take it from me. Now, when people have invoked spirits into your business, those mundane and those very substandard rituals will never work. It exacerbates your circumstances. It fuels it and enrages it. Because remember, those people invoke spirit on your behalf. They invoke spirit in your business place. So for you to get a cure for those things, please stop looking at different internets, different YouTube and TikTok videos and try it on your own. It's going to backfire on you. Go, I'm not telling you come to me. Go get someone who specializes in that. I do specialize in that. I could give you hundreds of information. It's never going to work for you because you do not know the ritual that has to be put in that to extricate you from this thing. So it's really a warning to you. They're very dangerous people outside. It's just like somebody taking a gun or a knife and shooting you. They will prefer going into a higher echelon of voodoo to entrap you for the rest of your life. It's just like they do not want to see you on the planet. They'll just shoot you or murder you. But you could be murdered with voodoo for the rest of your life. You will be incapacitated. You will never be successful in business. You will never be successful in anything. So for that, I implore you to go to a higher level, to take care of yourself. Because if you don't, you will be so for the rest of your life. Ladies and gentlemen, you could also visit me on my YouTube channel. Subscribe.
We have some major breaking news right now. The United States is now on the verge of an economic crisis from supply chain issues as a result of Donald Trump's tariffs. The executive director of the Port of Los Angeles spoke to CNN and said that this week, the Port of LA is down 35% in terms of shipments coming in compared to the same time last year. Port of LA had expected 80 ships to arrive in May. 20% have already canceled. More cancellations of imports are expected for June. Customers, according to Soroka, have already canceled 13 sailings for June. That number likely will only continue to rise in June as long as these tariffs stay in effect. That's not all. The imports coming in from China on boats right now is more than 50% less than this time last year. The drop-off is significant. Businesses are just not willing to pay the higher import costs because of these tariffs, and as a result, Americans will have less to buy, prices will go up, so get ready. Spread the word, and I'll do a full breakdown on my Substack shortly, linked in my bio, so subscribe for free.
Port of LA shipments down 35%. Imports from China down 50%. Cue the panic about empty shelves. Here's reality. Businesses are pausing imports because tariffs make it expensive right now. They're waiting to see if prices drop or policies shift. That's not supply chain collapse. That's strategic waiting. Will prices go up? Probably. Will shelves be empty? No. Companies find alternative suppliers. They reroute logistics. Markets adjust. This is how trade disruptions work. Temporary pain, then stabilization. If you're genuinely worried, slowly stock up on non-perishables you actually use. Don't panic buy and create artificial shortages. Business owners relying on imports? Diversify your suppliers now. Don't wait for the next wave. Plan ahead. Stay flexible. Ignore the hysteria.
We are currently in the great restructuring here in America, and maybe not even just America, but the whole world should be feeling this right now. AI automation is deleting thousands of jobs day after day. We're seeing it. Look at all these. Tens of thousands of people out of work, those jobs eliminated. Not just let go from their job, but eliminated. We already have an issue with too many unemployed people, not enough jobs in this country. But if we continue down this road, it's going to accelerate those numbers. There won't be enough blue-collar jobs for people to do. All white-collar jobs will inevitably get deleted. If a CEO can run his whole operation, his entire corporation off of automations, AI, they're going to do it. I promise you. It's all about profit at the end of the day. If I can run a $1 billion company and only have $10 million in subscription fees for like AI automation, yeah, I'm going to do that. So like, this is happening. There's no going back. What the fuck do we do?
AI and automation are deleting jobs. And yeah, that's actually true. But this isn't new. Factory automation killed manufacturing jobs. Self-checkout killed cashier jobs. Online shopping gutted retail. AI is just the next wave in a pattern that's been running for decades. So what do you actually do? Upskill. Learn something algorithms can't easily replace. Trade skills, plumbing, electrical, HVAC, healthcare jobs requiring human touch, creative work needing judgment and nuance. If your job can be done by a script, start planning your transition now. Don't wait until you're laid off to figure it out. The jobs aren't coming back, but new ones emerge. They always do. You just need to adapt instead of waiting for the world to stay frozen in 2015.
A laundromat in New York is completely disrupting the industry. You've got to check this out. Laundromats haven't changed since, well, forever, really. And here's a Levi's laundromat ad from the 80s. Look at it. Honestly, they still look the same, don't they? It's a business model just begging to be disrupted. And that's exactly what these guys are doing. They're called Laundrette. There's a young couple and they saw the opportunity and opened up their own laundromat in the heart of Williamsburg, New York City. It's clean, modern, and doubles as a cafe. You can do your laundry, grab your coffee, get a bite to eat, and get some work done, all in the one place. And from what I can tell, the business is doing super well. If you're thinking about setting up a laundromat in your local area, you can use IdeaFlow to test whether the idea would work where you live.
Whoa, guys, breaking news. By the way, I'm recording this breaking news from my hotel room in Paris, where I am attending an event and networking in the next couple of days. T-Serve stock just fell 44%, the biggest drop ever. The company cut its full-year guidance after reporting weaker than expected results. Adjusted earnings came at $2.04 a share, below analyst expectation of 64. Revenue rose only 1% to $4.9 billion, missing forecast. T-Serve now expected full-year earnings between $8.50 and $8.60 per share, down from its earlier forecast of more than $10. Revenue growth was also revised from 10 to about 4%. In response, Mark Lyons said that the company's performance isn't where it should be and announced a leadership shakeup. A new CFO, 2 co-presidents, and 3 new board members. The company also plans to move its stock listing from New York Exchange to NASDAQ next month. A major adjustment for one of the fintech's biggest infrastructure players, and the market's reaction shows how quickly confidence can shift when the growth slows.
T-Serve stock dropped 44% in one day. Missed earnings, cut guidance, fired the CEO. This is what happens when growth companies stop growing. The market punishes immediately. If you're invested in individual stocks, this is your risk. One bad earnings report, half your money gone overnight. That's why diversification isn't optional. Heavily invested in one company, you're gambling, not investing. And this is what losing looks like. Most people should stick to index funds. Let professionals gamble on individual stocks while you focus on steady long-term growth. Less exciting, way more reliable.
The cost of living is crazy. You don't need me to tell you that. But it appears like lots of folks are getting by just putting everything on a credit card, which is plunging Americans deeper and deeper into debt. That is according to a brand new report that found household debt in the United States of America just hit a record high. I'm talking about mortgages and car loans and credit cards and student loans. But despite all the debt, there may be a little silver lining, which I'm going to tell you all about in this video. But before I do that, I want to thank my paid Facts HQ subscribers for voting for this story as the bonus this week. If you want to vote on next week's bonus story, you can do that by just following these easy steps and becoming a paid subscriber too. It is because of my paid subscribers that I'm able to bring you the news every single day. This channel would go away without them. So if you would like to support my work, please consider becoming a paid subscriber. Okay, I'm going to switch things up. Before I talk about the bad news, which is all of the debt that we're all drowning in, I want to start this video with that little silver lining that I mentioned. So the New York Fed puts out this American household debt and credit report every single quarter, and they just released all of the data for the third quarter of 2025. So that means July, August, and September. According to the New York Fed, the silver lining is household balance sheets, which is what the Fed calls the financial health of a household. They say those balance sheets look pretty good, pretty strong, meaning overall, when you take everything into consideration, when you combine household assets and liabilities, generally, Americans are doing pretty good. Of course, that does not mean everybody, and it certainly does not mean that people are thriving. All they said was U.S. households are doing pretty good. Now, this third quarter report also found that delinquencies are now starting to stabilize, meaning the rate of people who are delinquent on paying their loans, the chart isn't going like this, skyrocketing. The chart is sort of starting to level out. Now, that's not to say that people aren't delinquent. They are, and I'm about to show you how bad. It just means that delinquency rates are not as jarring as they were a few years ago. Now, I know that's not much of a silver lining, but I just report the facts, and sorry, that's what I got. Okay, so now let's talk about this debt, because the fact is, based on the third quarter numbers, households in the United States, when you combine mortgages, car loans, credit cards, and student loans, are sitting at a total of $18.6 trillion in debt. That is a new record high. Every single debt category has increased by double digits when compared to last year. And you can really see it when you compare the third quarter of 2025 to the third quarter of 2024, so just within a year. Mortgage debt is up almost $480 billion. Credit card debt increased almost $70 billion. Car loan debt increased by $11 billion. But we need to talk about student loan debt, because that debt increased $47 billion year over year. But it's not just about the increase in overall student debt, it's about the percentage of serious delinquencies that is alarming. The New York Fed considers a loan seriously delinquent when you have not made a payment in at least 90 days. So the number of people who are now seriously delinquent on their student loans is more than 14% higher in the third quarter of 2025 than it was in the third quarter of 2024. That was by far the biggest delinquency increase of any type of loan.
Student loan delinquencies up 14% year over year, mostly younger people drowning. Here's the brutal truth. Student loans are the one debt you can't escape, can't discharge in bankruptcy. They follow you forever. So when people are struggling with rent and food, student loans get ignored first, but ignoring them is the worst move. Once you're in default, they garnish wages, take tax refunds, destroy credit, and unlike credit cards, there's no negotiating the balance down. If you're delinquent, contact your servicer immediately. Get on income-driven repayment. Request deferment or forbearance. Don't just hope it disappears. Still in school or considering it, be extremely careful how much you borrow. This chart shows what happens when you can't pay back.
That the New York Fed looks at. Now, a 14% increase doesn't sound like a lot, but when you look at the chart, you can really see it. Do you see that red line that just goes straight up? That is the student loan serious delinquency line. And you can see it just goes straight up starting in the first quarter of 2025. Of course, the blue line is higher in delinquencies. That is the number of people who are seriously delinquent with their credit card debt. But nowhere else on the chart does the delinquency line go straight up. So the question is, what is going on with student loans? Well, in January of 2025, that is the first quarter. That is when President Trump took office. And almost immediately, his Department of Education began the process of ending the student loan forbearance program, which then meant that people were getting sent to collections for not paying their student loans. And what this chart is representing is what we anecdotally already know, which is when people are struggling to pay their basic bills and they don't have the money to keep up, they are just going to choose not to pay their student loans. And that line proves it. I also want to point out one other place where we're starting to see a dramatic spike. Do you see that blue line that is going straight up starting in the first quarter of 2025? And then to a lesser extent, that red line that is also starting to go straight up. These are serious delinquencies by age of all types of debt. The blue line represents 18 to 29-year-olds, and the red line represents 30 to 39-year-olds. Those two lines, according to the New York Fed's data, say that younger people in this country are dramatically becoming delinquent on their debt. And that, the New York Fed says, is concerning, not just for these young people, but overall for the US economy. And you can really see it when you start to break down each of the types of debt. You can see the same trend when it comes to delinquent credit card payments. You can see the blue line and the red line are clearly leading the pack. And you can see the same thing when it comes to delinquent auto loans. Again, the red and the blue lines, those younger Americans are the ones at the top with the most delinquencies. Now, while the auto loan delinquencies and the credit card delinquencies and the student loan delinquencies really look dramatic on the chart, I want to just, for the record, make it very clear that these are not the biggest sources of debt in the United States. The vast, vast, vast majority of debt in this country is represented here in orange. That is mortgage debt. It accounts for 70% of all the debt in this country. And according to the latest report for the third quarter, Americans are sitting on more than $13 trillion in mortgage debt. So if you want to read this report for yourself or look at any of those charts a little deeper, I'm going to email all of it out to you in my next Facts HQ email. So make sure you sign yourself up.
Americans are sitting on $18.6 trillion in total debt. Record highs everywhere. But here's the nuance everyone misses. Mortgage debt is 70% of that total. And mortgage debt isn't inherently bad. You're building equity, creating an asset. The scary part is unsecured debt. Credit cards and student loans. That's where people actually drown because that debt doesn't build wealth. It just drains it. Focus on paying down high-interest debt first. Anything over 10% interest rate should be your priority. Get student loans on income-based repayment plans that match what you actually earn. And if you're young and starting out, be extremely careful with debt. Once you're in the hole, climbing out takes years. The alarmists want you scared. Don't give them that power. Get informed, make a plan, execute it. So what did we just watch? A lot of panic, some reality, and one bizarre voodoo business curse tangent. Look, the economy has real issues, markets are volatile, debt's climbing, jobs are evolving, but treating every correction like it's the apocalypse? That's not analysis. That's content farming off your fear. Here's what actually matters. Recessions happen. Markets crash and recover. Businesses fail. New ones emerge. That's the cycle. Uncomfortable? Sure. The end of the world? Hardly. The people who survive downturns stay calm, adapt quickly, and don't make emotional decisions based on panic content. So be aware. Be prepared. But don't be paralyzed by fear porn. Drop a comment. Are you worried about the economy or tuning out the noise? If this helped cut through the panic, hit like, share with someone spiraling, and subscribe. The world's not ending, but the algorithm wants you to think it is. Stay sharp.